have a role to play. So you know your department best, you know your budget, you know your sources and uses of funds. So I still, and my departments can't step into your shoes as far as some of the responsibilities that you have in your department management. So for an example, accounts payable. So all the money going out the door flows through our accounts payable department. It's over $1 billion a year, 400,000 transactions. Some days we process 700 payment requests. We average 300 to 400. And our processor's goal is to process that payment as quickly as possible because that's what the campus wants us to do. They're not handwriting experts. They're not fraud detectives. We find things that are unusual. We do that on an ongoing basis. But again, they're some of our lowest paid employees, and their goal is to process your transactions. So some of the things we're going to talk about today, again, is what your role is to make sure that on campus we're doing the things that we need to do. So what we're going to talk about today is internal controls. Who's responsible for what part of internal controls? What can go wrong? I'm going to tell you some scare tactics. We're going to talk about the cost-benefit of internal controls. I'm going to give you some examples. I'm going to talk about statistics, and then afterwards I'm going to recommend some additional trainings that we have that's actually going to get you into the tools that we have to help you. So what are internal controls? So this is the accounting definition. So it's a process, and it's affected by management, leadership, directors, you here in the audience, me, and it's designed to provide reasonable assurance regarding the achievement of objectives. Now notice how it doesn't say absolute, it just says reasonable, because we need to consider our efficiency and our effectiveness. My goal, because I'm responsible for the university's financial statements, is I want to be able to say that my financial reporting is reliable. You in the department, us as an institution, we're an ethical organization. We want to follow all our applicable laws and regulations. So we have a compliance function also. So as you know, we're very complicated. We're decentralized. We're a huge enterprise. We have 31,000 students, 23,000 employees, almost 30,000 hospital and clinic admissions, almost 1 million outpatient visits, 300 units, and we have 2,000 account executives and principal investigators, and I'm sure many of you in the audience are among that group. So, what are our goals? We want to maintain good accountability, and again, it is very challenging in this very complex and decentralized campus. And the university does take the responsibility of internal controls seriously. We're going to talk about how we do that. So one thing that we always want to consider of internal controls is what is our tone at the top. So this comes from the president, our former president, but I know that the current president supports this too. Our expectation from the very top is that we act responsibly, we do the right thing, and we have shared stewardship and a commitment to ethical behavior, and that's part of our everyday activity. So you as leaders in your departments should also be periodically saying similar type messages so that your personnel understand that the expectation in your department also is that we are stewards. We have many public funds entrusted to us, and our expectation is that we will always have ethical behavior. Okay, so let's talk about who does what. So vice presidents, of course, are appointed by the president, and they're our senior administrators, and are responsible for colleges, departments, auxiliaries, and support services. And as you may or may not be aware, our vice presidents and president have what we call policy override. Our policies are in place to help protect us and give us good infrastructure, help us be compliant, but we do have the occasional situation that doesn't quite follow within that policy and procedure, and our president and vice president have the authority to override. So deans and directors and chairs. So this group here, so what are you directly responsible for? Designing and implementing the control system for your departments. And I know that that can be hard sometimes. We have people on campus that are responsible for multi-million-dollar budgets. They're highly trained, have expertise in a field that may have not ever included a single business class, and yet we have this expectation. Our deans, directors, and chairs are responsible for executing our policies, procedures, understanding what their vice president's expectations are. And these responsibilities do give you the authority to act on that, make sure that they're implemented. All employees, we want to be sure that they understand what the policies and procedures are that affect their job, and we hope that you give them encouragement and the time that they need to make sure that they understand those policies, give them an opportunity to attend trainings. So we want to comply with the controls established that are going to protect not only the university, but that employee. We're going to talk about that in a little more detail. If you have an employee that is able to point out a weakness, be sure that you listen. We're going to talk about that in some more detail, and encourage that dialogue and allow them to ask questions. Okay, so the university's foundation of internal controls. We do have a policy specifically on internal control, so when you have 15 or 20 minutes someday, I'd suggest that you read that. That helps you understand what your responsibilities are. So that's a subset of our policies and procedures manual. And again, as administrators, as leaders, campus expectation is that you understand the policies and procedures. We have all kinds of official communications that go out all the time. They're posted to the web, they come out in memos. So to the extent you can, you circulate that amongst your department, and again, help people understand your expectations. We offer a lot of training through financial and business services. We'll talk about some of those a little bit later. So we encourage employee education. And then internal audit is also a function. If you're aware of some type of weakness that you may have, you have a concern, you may even suspect fraud, that's a good time to contact internal audit. But it's hard to rely on internal audit to detect fraud in that you might only see them every few years. It might be 5 years before you see them again. A lot can happen, and actually if somebody's determined to commit fraud, it's actually fairly difficult to uncover. Internal auditors come in and they sample, they rely on your statements, they rely on what employees do. So you, as the front line, have the best ability to understand what's going on in your department. You want to prevent fraud, but you also want to be sure that you're able to detect it. So one of the important policies that we have is it tells us who can authorize transactions and who can approve transactions. And you hear this all the time, that we want you to review and approve the monthly management reports. And I'm copied on the internal audits that happen around campus, and this is a very common recommendation from internal audit, that even though it's a policy and it's a great frontline tool for you to keep on top of what's happening with your department, it doesn't happen as regularly as it should, or as thoroughly as it should. And we're going to talk about this in some more detail. And once you sign off on a transaction or a management report, your signature does mean something. So once you sign off, according to policy, it means that you believe it's accurate, or that corrections are in process, that the expenditures are reasonable, necessary, and for legitimate university business, not a personal element. If you have grants and contracts, that it's allowable and consistent with either donor or sponsor restrictions, and that you're aware of the supporting documentation, and that may be available for review by internal or external auditors. Okay, so what can go wrong? So we call this the fraud triangle. In general, if all three of these items are present, you have the opportunity for fraud. So as an example, you have an employee who has an addiction, so they have some financial pressure, and as an employer, we control opportunity. And this employee sees an opportunity, and then they rationalize it. Oh, I'll pay it back, or it's a one-time thing. I have no other options, or I didn't get a raise for 3 years and I deserve it. So those are some of the conversations that an employee may have. So we can't control the personal pressures that our employees have, and we can't necessarily control their rationalizations either. But again, as employers, we want to control opportunity. And I'm also here to say that all three of these things don't have to be in place. So when I read the paper and I see these different examples of fraud, I always ask myself, could that happen at the university? What does it mean for us? So I don't know if you followed the story about the director of This Is the Place Monument. So he was the executive director at the very top of the organization. So again, there's an expectation once you reach the top that of course you're ethical, you do the right thing, you know that you're entrusted with public funds. And this guy, Matthew Dahl, he even said he came from a good family. He had no pressure. He earned a $250,000 salary, and yet he had opportunity, and he stole many hundreds of thousands of dollars. So he says that he's sorry, and I'm sure he was sorry that he got caught. But again, we want to do what we can to control opportunity. And then just a few weeks ago, too, there was another article in the paper. It just happened at Utah State, where a director of admissions was terminated, and I don't know the details yet, but what the paper reported was she was terminated for irregularities, and typically that means, suspected fraud, for the mishandling of financial aid. So to be determined. We'll wait for follow-up articles on that. So what can go wrong? We like to think that not much goes wrong here, but unfortunately the stories tell us otherwise. So we've had a number of frauds. Maybe you've read, seen some of these in the Utah Chronicle or in the Tribune. But we had a retail department that lost almost $150,000 where this person was manipulating accounting records and stole cash. So cash is always a risk point. Another one where an employee used a P card to buy unauthorized items, and P cards should be approved, so not just the person who's making the purchase, but the supervisor, and you'd like to think they're going through the records. This last one on this slide was just $12,000, and I remember in the Utah Chronicle seeing a picture of what these items were, and it was just CDs and cases, and this person ruined their career, and their reputation is in shreds over just the fact that they had the opportunity and couldn't control themselves. So again, we also want to protect our employees by taking away that opportunity. On Upper Campus, we had a department misappropriating patient refunds. We had a cashier who used a check scheme to steal about $30,000. We had another Upper Campus who stole a couple $100,000 and used a bunch of different fraud schemes. And what we find out a lot of times, too, is when we find a problem, so for example, there's a petty cash count and there's funds missing. And then there's an explanation. Oh, it was in transit and I meant to pay it back, or it was a short-term loan. Oftentimes then you find out that if a person does commit fraud, it's in many different ways. So then you look at that employee and, what else did they have access to? Or let's look at their payment requests. So oftentimes when things go bad, they go bad in many ways. Again, cash is always a risk point. Stealing cash receipts. We had a department where an employee fabricated documentation. I can tell you in this day of Photoshop, if you're not aware of a transaction, again, our processors see that receipt, whether it's produced in Photoshop or it's really a valid copy. It's very difficult to tell these days. Plus, this person had a spouse with a different last name. We had no way of knowing that in central administration, and she also forged signatures. So this employee was prosecuted. We prosecute to the extent that we can. We'd like to send a message that won't be tolerated, and hopefully if somebody else has that incentive to commit fraud, they'll think twice about it too, knowing that we do prosecute employees. Okay, so what happened in these cases? Poor or missing internal controls. So in this one where this person stole a couple $100,000, she practically bankrupted this one small department. It would have been prevented fairly early on if someone had just looked at the management report and said, you know what, my budget for non-personnel is $25,000. How is it that I've already spent $150,000 6 months in? So again, these are some questions that you want to ask yourself when you're out in the department is, we have budgets for a reason. And I'm told, I haven't seen this personally, that a common fraud scheme right now is with toner. So toner's expensive. An employee orders toner, and then it's really easy to resell on the internet. So for example, you have a small toner budget, and for some reason you have 5 times that amount spent. It's good to ask some questions. So again, internal controls give us reasonable assurance, but not absolute assurance. So why is it that we can't go for absolute assurance? For one, we're unfortunately not funded that way. So for example, if you want a lot of checks and balances in your system, maybe you have 2 people, 1 person prepares, 1 person checks the work, but now you've got 2 FTE looking at a transaction. You might have collusion among 2 or more people. Thankfully, that's rare, but that can occur, and that can make it difficult to detect. It might just be faulty judgment. Somebody's not aware that a law has changed. They don't know the policy, and they're just plain doing things wrong. Or if a faculty member comes to them and says, hey, I want this trip reimbursed, your administrator or your accountant may not know to ask the questions or challenge an important faculty member that, it really looks like it might be a personal trip. And we have management override, again, like in the example that I gave you about the executive director at This Is the Place Monument. Even leadership can have some ethical lapses and can override transactions. So we need to balance. That pendulum swings around. If you've had some kind of problem in your department, the natural reaction is to tighten that up, to put more resources on it. But again, these are lean budget times. We're not always funded to have all the FTE we need to look at that. So we've just got to weigh out our risk. So what are the risks? That our goals won't be achieved, that our operations are not effective or efficient, that we might lose assets. We don't have the personnel to do our asset checks, or we leave our assets in unlocked rooms. We can lose equipment. A risk is that our financial information is not reliable. And then a big risk, too, again, as an ethical organization, we want to make sure that we do follow law, rules, and regulations. And those are risks also. So high risks, public scandal. We do see that all the time. Thankfully, not much with the university, and we want to keep out of the paper unless it's something very positive. So a non-financial risk that happened at Pennsylvania. Things like this that are high public scandal can actually affect loss of public trust. It can actually decrease enrollment, and of course, it injures our reputation. We might have penalties from some external organization. We might not get a grant renewed. So there are really a lot of consequences. But again, we've got to balance that. So if we've got excessive controls, we've got increased bureaucracy. And that's something that I have to balance too, because again, you want your payments processed as quickly as possible, and yet I want to be sure to the extent that I can that those are necessary transactions, that they have the right approvals, that they're not fraud. We want to consider our productivity, our complexity, our cycle time. And all of these, in some ways, are our non-value activities, our mission-based, our frontline. We don't want to devote too many of our resources to our back office. It takes away from our front line. We have limited resources. So what are good internal controls? We talked about the control environment, what you can do to get a good message at the top. We've got our authorization and approval processes. That tells us who needs to sign what at policy level. And at the department level too, you may have something even more strict. We've got monitoring and we've got separation of duties. We're going to talk a few minutes about each of these things. So separation of duties. What this means is that different functions of a financial transaction are split out between more than one person. So for example, a financial transaction has the first piece, the initiation, and then the authorizing, the recording, and the reconciling. What I saw a few years ago when we had those budget cuts is out in the departments, staff members were cut, accountants were cut,